stock market dips as Salesforce declines and investors anticipate inflation data. On Thursday, the stock market saw a notable decline, primarily driven by a significant drop in Salesforce shares and investors' anticipation of crucial U.S. inflation data. The Dow Jones Industrial Average fell by 320 points, or 0.8%, largely due to Salesforce's performance. The S&P 500 decreased by 0.4%, and the Nasdaq Composite fell by 0.6%. Salesforce experienced a steep decline of over 21% after failing to meet revenue expectations for the fiscal first quarter. Additionally, the company's projections for second quarter earnings and revenue did not meet analysts' expectations. Conversely, Foot Locker surged by more than 22% following stronger than expected earnings per share. The market's movements came amid a challenging, holiday-shortened trading week. The S&P 500 has dropped around 0.9%, and the Nasdaq Composite has decreased by 0.4%, potentially ending their 5-week winning streaks. The Dow has plunged more than 2%, marking its second consecutive losing week. An increase in the 10-year Treasury yield has negatively impacted investor sentiment. Higher yields often deter stock investments, as they lower the multiples traders are willing to pay for equities and make safer investments, such as Treasury bills and money market funds, more appealing. Although the yield dropped below 4.6% on Thursday, it remained above the 4.5% threshold, which is considered problematic for stocks. Despite the turbulent week, all major indexes are on track to conclude the trading month on a positive note, which ends with Friday's closing bell. The Nasdaq Composite and S&P 500 have risen by more than 7% and 4%, respectively, in May. The Dow has seen a modest increase of about 1% for the month. Clark Bellin, Chief Investment Officer at Bellwether Wealth, indicated that the market might continue to experience volatility due to uncertainties regarding consumer health and interest rate trajectories. He compared recent market activity to the ebb and flow of a wave. "We still have some good excitement that's been built up in the market. A lot of this is momentum investing," Bellin stated. But momentum investing works until it doesn't. Investors are now looking forward to the release of the Personal Consumption Expenditures Price Index report for April on Friday, which is the Federal Reserve's preferred measure of inflation.